Hello dear traders and welcome back to the channel. It's Levine here, and today we're going to do something super practical. We're going to take everything we've covered so far in the last couple of videos, right? The Fibonacci retracement tool, the relative strength index, and on this video we're going to add a third indicator, a third layer of indicator is going to be the moving averages. Why? Because today, guys, I'm going to show you how to build a fully operational, beginner-friendly trading strategy that you can actually use today. Start using today, right? We're going to set clear entry conditions, figure out what triggers a trade, how to manage your risk properly, and exactly when to get out of the trade, whether you're banking profits or cutting losses. So, if you've been wondering how to piece it all together into a working system, this is the video you've been waiting for. Let's dive in. Alright, so here's how we do it. First of all, you can see I left both of my indicators on the chart, right? So we're picking up right where we left on the previous video. So we have the RSI, we have our Fibonacci key levels in place, and now we want to add one more indicator to complete a fully operational trading strategy. All right, that's going to be the moving averages. So I'm going to the same icon, right? The same icon, and I'm going to pull up moving averages. You can find it maybe in the freestyle list, or if not, under the trend drop-down menu. Right here, moving average. Now I want to tweak the numbers. You know, I have my own set of numbers, parameters that I've been figuring out, dialing in over the last decade or so. So what I want to do here is actually tune in two numbers. First one is 13. I'm going to give it a red color. That's my fast line. All right, and then I'm going to do the same process again. Take moving average, the second one. Then now I want a second line of moving average. This time it's going to be 21. All right, the reason I'm using 13 and 21, by the way, I'm changing the color. I want to give it a different color, so we'll take the blue color for this second line. It's going to be the slow line, right? 21. The reason I'm working with 13 and 21 is because they're both Fibonacci numbers. 13 and 21 are both consecutive Fibonacci numbers, okay? So, now we have all of the indicators under one roof. Now let's see how we can use this as a viable trading strategy with all the tactics in place, all right? Including risk management. Let's see how that works. So we already talked about the combination just between the Fibonacci key levels and the RSI. I explained how that works, right? But now I'm going to show you first an example. We're going to go back a little bit to see how we would have been triggered into position here and where exactly we would have been terminating it. And then we'll do something live, right? We'll actually go into the present time and talk about what's happening right now and what should happen if we were going to be activating a new position. All right, so let's go back first. I want to go back. I'm going to take the crosser. I want to show you why, when exactly this strategy would have been triggering a new buy position. Check it out. So price action, because we're talking about now moving averages, slow line and fast line. The slow line is the blue one. The fast line is the red. So basically, price action, let's go back to March, April, right? Under these conditions, take a look. RSI is under 50. Price action is on its way down towards the strong Fibonacci key levels that we extracted earlier in early videos, right? These two right here, 550 and 566. And here we can observe how they find that support needed, that necessary support to start turning back up. And as price action starts to turn back up, two things happen also at the same time almost. The RSI is breaking above the 50, right? Breaking above the 50. Price action got support from both Fibonacci retracement levels, clearly, right? Visibly, very visibly. And then what we need to wait for is for the last trigger, the last indicator to line up. And that's the moving average. So here we need the fast line to cross the slow line. Fast line is going to cross from below, it's going to cross the slow line. Once that happens, boom, all of our indicators are aligned, and that's our green light to pull the trigger, to establish a bullish position. So take a look how the fast line, the red, is crossing right here, crossing above the blue line. Price action itself, coming from the retracement support key levels, right? RSI is above 50, just came from below. There you go. This is a green light to pull the trigger. So this is where we get into position. Now, when are we going to terminate a position? So here we have a few options, all right? And I'm not referring to the RSI. RSI doesn't play a role here in the exit strategy. The exit strategy is all about our stop loss level and the moving averages. So for example, as long as the moving averages stay as they should, meaning fast line is above slow line, we stay in position, right? But if a daily close ends up closing below the fast line, that might require some action. We might get into some protective mode, where we might want to tighten our stop loss level, for example, or take some profit off the table to reduce the position size. That's another option, right? Or maybe close the position altogether. Usually it doesn't propel me to close the position entirely, but maybe just take some profit off the table and reduce the position size a little bit. What would trigger an exit is the fast line, the red, crossing below the blue line. And that did not happen here at all. You see what I mean? But also we had a daily close below both lines. That's another reason to get into protective mode, meaning maybe tighten up the stop loss level even further, or taking some more profit off the table, or just reducing the position size, even if it means taking a very small loss in the process. But eventually, price action remained strong. The fast line remained above the slow line, right? Red line above blue line, didn't cross below. So we needed to stay in position up until price action hits that 642, which is the next key resistance, right? And that's where we would have been taking profit. So that's a history. That's a case based on history, right? Let's now talk present time. That's interesting stuff. Here, guys, we might be triggered into position even today. All we need is price action to jump back above 642 to get triggered, and 653 to get fully triggered. I suppose the fast line is going to stay above the slow line, and here RSI is going to turn back up and start to cross above the 50%. Everything's going to be in line for us to pull the trigger, establish a bullish position, chasing the next big resistance, which is right here at 700, also extracted from our Fibonacci retracement tool. So we have an exit strategy as far as profit goes. We have an exit strategy as far as loss goes, right? We have a stop loss level that we need to establish, of course. We can't forget that. We're going to put our stop loss level somewhere around the level of 607 or 608, right? We'll give it a red color. That's where our stop loss level is going to be. The stop loss level is like an insurance policy at the end of the day. And yeah, when we have our conditions with regard to our moving average, if we're going to be pulling out manually before, prematurely, so to speak, right? If we're not gonna be stopped out before, then once price action, once the fast line starts to cross below the blue line, or price action breaks below that key level right here that it's battling against right now as we speak, that's also going to propel us to run for the exit and terminate this buy position. There you go, a full strategy from A to Z. How to prepare a position, how to prepare getting into a trade from A to Z, a full-on game plan and a full-on trading strategy. Hope you enjoyed that video, guys. We're gonna see you in the next one. Don't forget, like and subscribe so you don't miss the next videos. Take care.